This is a powerful overnight swing trade. In a moment, I'll show you exactly what I look at to help me determine how I approach my overnight swing trade. There are a few things that I think are important when considering an overnight swing trade. One, what I'm trading. I like to be consistent so I get to know the ETFs and options that I'm trading overnight. And very specifically, I focus on SPY, QQQ, and IWM. At the very end of the trading day, we'll take a look at our signals to decide how aggressive or conservative we're going to be in our overnight swing trade. What is an overnight swing trade? It's when we buy at the very end of the trading day and we sell the next morning, taking advantage of the overnight gap. You've seen the overnight gap. The market closes at one point at the end of the trading day and opens up either up or down the next morning. That's what we're trading, that gap. One trade rather than a bunch of little trades throughout the day. We go for one big trade for a bigger move and with the idea of bigger profits. And we amplify that opportunity with short-term, short days until expiration options, usually less than 10 days. Sometimes it's one day if we're really aggressive, maybe 2 or 3 days. But if we want to be a little less aggressive or cautious or maybe over a holiday weekend, we'll look at 7 to 10 days. But we get to know those days to expiration. We know how they react to different markets because we do the same thing regularly over and over again. And before I buy my options, I head on over to spytomorrow.com to check out my dashboard. I can always just look at the up or down signal on the main page. And this is a 2 and it goes from 0 to 5 or 0 to -5. So this is a little bit up. But I want to see what it looks like underneath. So I'm going to click on my overnight terminal dashboard and I can see a number of things here. Here is my blue CV pressure, which is one that I've been working on. It's honestly one that I launched a little too early, but still has a lot of promise. But what works really well is the market pressure. And this is kind of a down signal. But we have 2 ups and 35 is kind of the midpoint. So when it's below 35, we're bullish. If it's over 35, it's bearish. So we're a little bit bullish here, not very strong, but this information here lets me know we could have some good movement the next day. And so I'm looking at this, I'm going to point up, but with a very small directional trade, because if things go south tomorrow morning, which it looks like, there's an opportunity for that, well, I'll be cautious, but I'll point up for overnight tonight. And this is what happened the next day. It's the next morning, about 10 minutes before the open. And as we saw last night, we have some bearish signals, but overall the signal was up. And so that's what we went with. And it shows there could be some expansion movement today. But ultimately, we had some decisions to make. And with kind of this mixed view, I decided to go with a small position size. It's a small call leaning up, which looks like it may have been a good decision. I could have hedged if I felt like it really could have dropped. And like many mornings as of late, it starts up and then has gone down. And based on those numbers we were just looking at, that very well may be the case again. We'll see. But fortunately, we are starting up. I bought IWM. SPY is only up 0.09. QQQ 0.7. IWM is 0.22 now. Really all I need to think is maybe about a 0.12 to 1.5 to become profitable for the IWM. So hopefully it stays there in the next 5-10 minutes. Again, if I really thought it might go down, I could have hedged with a 2-to-1 options ratio. But, you could lose more if it stayed flat. And as of late, as you can see, things have been flat. And if I had done that, this is not really enough of a move to make that a strong position. We probably would have lost a little bit on the put, maybe more on the put than I would have made on the call. And so it might have been a losing day. But when you have big moves regularly, sometimes, especially when everything is going up and down, sometimes it's good to have that hedge. Usually a 2-to-1 delta is the way I like to play it, but you can do a 2-to-1 based on price or 2-to-1 based on the number of positions, say 2 calls at a specific strike price and 1 put. There are many ways to approach it. I'll show you what happened in a moment. Okay, here we are at about, 0.21. We're just a few seconds away from the opening bell. I'm kind of set up here to be prepared. Because the market has been going down so much, I'm going to probably just keep a tight stop and make sure I'm profitable, even if it's a small amount. I'll put a stop in place, hopefully let it ride up. But if it goes down, then it goes down and I'm out. And, sometimes it's better to hold on for a while. But in this situation, I just kind of want to be careful because I'm sure just based on the last number of days, there's just been a little bit of a down bias as the day progressed. Here we go. Okay, we're up about 12. So we bought in at 60. So I'm going to do a stop limit. Oh, there, that's great. So let's do a 63, 62, just to give us something to start with to protect ourselves. And we can always scooch our way up. And let's see, it's at 72. So let's make sure we're profitable. And just let it sit from here. See if it matures going up. Yep, and it is. We could do a little, a little more, but then we'll let it be. Again, not a big win on the day. If we get it's going down. Let's just see if it goes up. Now we're in the money. Hopefully it'll continue. Sometimes it's best to walk away rather than keep a too tight of a stop. Let's put us to 75. That means it's about a 25% profit. $15 out of the, Continues to look good. I knock it up to 80. We're in pretty good shape here. So we're over a 30% profit. I want to make sure we get it, so I'm going to give it a little room there. It's continuing up. That's great. There's a point at which it'll start coming back. I'm pretty happy if we end up out here. So I'm going to completely turn it off and come back and see if we either stopped out with a profit or it just kept going up. And so far, going up. Okay, I just got knocked out. Let's see what happened. Filled. We filled it at 90. It's 94 right now. It may go down, may go up. Doesn't matter. So 90, I bought it at 60. Should be some simple math here. Made 50% on that trade overnight. So that's what it is. You see, it's down below. So, sometimes it works in your favor. Sometimes it does not. Following it up, you may go down for a little bit, readjust, then pop back up for the day and go much higher. That's why sometimes I will set a time. Like we're not even 5 minutes into the trading day, but maybe by 11, it's up 1.5%, and that would have been tripling probably of our overnight option. Again, these are decisions you make. Exiting is what really makes the winners or losers in overnight trading, and we all make mistakes. That's why it's important to practicing on paper. And of course, when you do begin, start with small amounts like $60 overnight. Turn 60 into 90, then eventually you'll be turning 1,000 into 1,500. It just takes time. Develop your style, get to know your ETFs and your options and the market in general, and get to know how to read these things. Just what I said last night, it's more up pressure, but there is some downside to be concerned about, but it's showing there could be a good move in the process. So I took the risk just going straight up with a small directional trade, and it worked out. I've been developing my algorithms for a number of years, and with each iteration, I learned something new. Some algorithms outperformed or helped me develop new features. Others completely failed or broke. And I released some too soon and some not fast enough. It's a process of learning, but all the time I continue to improve my algorithms and add elements that help me make better decisions, which in turn helps people within my membership community make better decisions. Let's be real, developing an algorithm which helps us determine how the market might open the next day, well, it's a pretty tough job. However, over the years, the ups and downs, pain and successes have actually been worth it because each algorithm keeps getting better and better. The early ones were 65-70% correct, then 70-75% correct, and now I have algorithms that regularly end up between 75 and 85, and in some markets even 90% correct. But understanding that every up signal and down signal doesn't have the same strength allows us to develop new tools to help improve our insight. Understanding the strength of the signal, up or down, is great, but if you know that it's a strong up or a weak down, it can allow you to position size more effectively, to decide if you're going to be aggressive or conservative overnight. Because the name of the game is management, because you're going to have big wins, but you can also have big losses. And understanding how to unwind a trade in a way that can minimize your loss or maximize your gain or just turn around a situation completely, well, having good information can help you make the best choices. While my full dashboard isn't available on the front page of SPY Tomorrow, the up or down signal is available, which gives you the opportunity to see if this type of overnight swing trading is right for you. It's a high risk, high reward style of trading, kind of in between day trading and longer term swing trading. So I recommend that you paper trade overnight a few times to see if this style of trading works for you. So here are the parts of an overnight swing trade. We buy at the end of the trading day and we sell in the morning. Selling is certainly the most important part of that process, and there are different ways to go about it. And I have other videos to dive deeper into how to exit our trades. But it's an overnight swing trade, and we trade based off of a signal. And you can use any signal you want. You can use the front page of SPY Tomorrow, but maybe you could use put-call ratios or possibly the MACD or moving averages. You can use any type of signal you wish to use. And the idea is to maximize the overnight gap with options. And so we'll buy an option at the end of the trading day, sell it in the morning, but we may go small directional. We may hedge our trade by maybe buying a 2-to-1 options ratio, meaning if our signal said up, we'd buy 2 calls to 1 put. And there are a few different ways to go about that. Again, I've got videos related to that. But the thing is, you need to decide what your position size, your risk tolerance is. All these elements come in a package, but the main thing is you do it over and over again. You refine your style until you regularly, at the end of each week, at the end of each month, are ahead of the game. So consider testing it out by paper trading for maybe a week or a couple weeks or a month. And if you have any questions, of course, put them in the comments below, and I'll see you in the next video.